European markets seem to have got themselves quite excited about the prospect of a 15% deal. We had this as the main theme yesterday. It continues to be the main theme. That and some maintaining guidance from corporates this morning. Is that underpinning sentiment, do you think?
Yeah, absolutely. Obviously, the trade deal headlines are kind of very positive. And we discussed this yesterday, that it seems crazy, but traders probably have to skew positively into the deadline next week, even if you think tariffs will ultimately be damaging. That's over the much longer term. That the headline risk in the short term is for more deals to be announced until we get to that August 1st deadline. And it looks like lots of these deals will be announced because we've now got a template of around that 15% level. Ultimately, that's super damaging and really bad, and particularly for US economy and US stocks. But that's not the theme we're going to trade now. Helping the story also, not just earnings, but the fact dollar weakness is also helping as well. And the PBOC encouraged that with the much lower fixing overnight too.
Does the dollar continue to go down? This is the theme throughout some of the corporates that we're watching this morning.
Do you know what's interesting is that, as you know, I very much believe in longer-term dollar depreciation in the last couple of years and think there's a long way to go. Given the number of catalysts we've had actually over the last 24 hours, it's actually notable that dollar's not even weaker. You've got the PBOC encouraging, you've got the trade deal headlines, which are positive for other currencies. The dollar-yen trade is back because the BOJ are likely to have to hike rates, or at least open the door to hiking rates.
People are chasing US markets? Do you think there's some flow?
No, not particularly. I mean, you're seeing US stocks are still underperforming on a global basis, around the rest of the world. More of the benefit from the trade deals is going elsewhere. Sure, we're getting the meme excitement in the US. But so you'd think that actually, everything in the last 24 hours is lining up for dollar weakness, and we're not seeing dramatic weakness, which probably means that people are struggling to push a little bit further in the short term.
You mentioned the meme stock frenzy that's been going on. GoPro, Krispy Kreme, Kohl's, all of these names seeming to catch a huge amount of attention. Call options are surging on these names. What do you make of that?
I mean, look, it's not great for kind of the structure of the market in terms it makes it a bit more flawed because these are highly volatile names and that kind of leads to spiraling kind of losses in other assets. So I think that this makes it fragile, but I think people are mistaken when they see meme stocks, it's time to go short. It's not a straight line as that. As we all know, the best thing to trade is going long a bubble in the early stages. When you spot a bubble, you get long. You don't fight a bubble. And so I think when we see meme stock, we see some of that exuberance, and you don't fight it immediately. It's a warning sign for much longer term.
Meme stock's one thing we're watching stateside. Tech earnings, something else we're watching stateside. And even for macro tourists, this becomes interesting when AI is such a huge theme, of course. And we've started to see big capex numbers coming through. This certainly the theme out, the alphabet numbers. How is this going to feed into market sentiment, do you think?
Look, from what I've seen, the alphabet numbers, probably haven't had time to go through in detail. This is really positive. I mean, it shows that the AI theme is durable, and by the sounds of things of Alphabet, what they're really pointing towards is the swivel to agentic AI next year. And that might be the whole next leg of this AI theme. So I think that maybe is durable. It was interesting because we had the clash of the Tesla and Alphabet earnings. And going back to the meme point, Tesla's vulnerability is not great for meme stocks today because it's the same sector that invest in both Tesla and meme stocks. Tesla is a meme stock for many regards. But I thought the Alphabet stuff is really, really positive on a structural thing on the AI theme. So again, I think the macro tailwinds are quite positive for this market, despite the excess exuberance we're seeing in meme stocks.